presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. You know, what I find funny about that intro with George calling is I actually met George in real life, completely randomly. We ran into each other, and I had no idea who he was, and he said, I know you. And at first, it always gives me pause, because the question is how? But he's a great guy, and it's so good hearing from listeners, you know. And George, if you're out there, I hope you're doing well, buddy. Hope you had a good Christmas, good New Year's. We're going to have a great new year. 2025 is right around the corner. This is going to be our last show of the year. Of course, we're going to be off tomorrow. And then we'll be back, I believe, live on Thursday. So we'll see what happens with that. And then something important to note as well is January 9th, the market will be closed. I'm not sure if we'll be in office for that regardless. But that is in honor of Carter's death. Let's take a look at what we got going on. We have the composite off about 0.62%. You get the Dow Jones Industrial kind of flat right now, but off about 0.07% at 42,542. You have that DXY ticking a little bit higher today, up about 0.45% at 108.44. You have crude oil staying right around that 71, high 71 area at 71.89, up 1.27%. Oh, let's see. You got those Russell futures up about 0.36%. How about that? You have the SPY trading off 0.28%. So we're getting a kind of maybe an end of the day little rally there as well. And you know, I want to say as well, I saw tweets today. It's like, why is the stock market crashing? And I mean, we're just trading right back around November 19th and 18th, right? You have low volume going into holidays. I mean, you could get people selling off losses for taxes, whatever it may be. You know, additionally, I want to say as well, I think there are some systemic issues that exist. We could talk about those a little bit. And that got me started. The thing that got me thinking about that was actually a tweet from Bill Ackman today. I believe he's going to go live after the close of the market and speak about an investment that he's looking for in Fannie Mae and Freddie Mac. You can actually get those OTC. What is that ticker? I think it's... If you give me a second, I will look up the ticker at some point, and we'll talk about that. Because I want to talk about some other risks as well that exist within private equity groups and real estate. Now, that's more commercial real estate as opposed to so that Fannie Mae and Freddie Mac do, but still this idea of leveraging against assets that might depreciate sometime soon is obviously a massive systemic risk. But other than that, I think kind of what this pause, really is uncertainty regarding what's going to happen with the Trump presidency. I mean, there is a chance, of course, that you get sideways movement until the inauguration or a little bit afterwards to see what actually happens. I think something that's been nice is that this hasn't necessarily been a total black box in the sense that Trump is being very vocal about things he would like to do. Now, I think a lot of it, he's an entertaining figure without a doubt. And so I think a lot of stuff is hyperbolic. But, we have to wait to see kind of what actions and measures are actually taken. And then I think the market can establish itself from there. But maybe I don't see necessarily anything that exists except that high leveraging against things like commercial real estate that private equity is doing that could blow this up in any major way. And famous last words probably, right? It is unfortunate that you're not getting a massive rally into the last day of the year. But again, I think that's just because we're in a presidential election cycle here. And I think, I haven't back traced anything to see what that was like in the past. I know Steve Rhodes, that's something kind of in his wheelhouse. If I had some more time, I can definitely take a look at that. But yeah, that's kind of where I'm at right now with everything. Your small little like pop stocks that we've been looking at recently are getting absolutely obliterated today. or they're going up highly, but it's all in low volume. So I'm talking things like Castellum, right? I didn't get back into Castellum, luckily, but you have a nice, huge movement down. This is on pretty low volume, however, right? Trading at 170 at 34.11. You know, they honestly around these levels, like sub 100 million market cap is kind of interesting, right? I mean, you know, you could push this down a little bit further. Additionally, I am surprised that they actually did not do any kind of offering today, especially when you're trading at a high of what, 283. You know, you closed around 258. They just didn't do that. I still think they probably have stuff in the pipeline. You know, we're talking cybersecurity going into 2025 and how massive that's going to be. Of course, they're able to bid on the Oasis IDIQ contracts, which is huge. They need these contracts. They have been improving financially. Still, you know, quite a, you know, it's speculation at these kind of levels, especially at this market cap, right? They're a company that is trying to get convalescent. And you know, we'll see what happens on it. But it's interesting, and it's good that they're able to bid. So, you know, you can think of 2025 as years, maybe they catch one or two, and this kind of expands out for them, right? Gives you that kind of catalyst. Looking at things like LAES, that is just getting beaten down today, off 27.36%. Again, you know, you have some lower volume today. You have lower trading going on. Any kind of move makes big movement, right? So, it's still at 141 market cap, which is impressive. I think this is wrong, honestly, for Thinkorswim, the market cap size, at least for LAES, because I think it was trading at 800 million a few days ago, and you know, you're only off like 30% or something like that. That doesn't get you 142. Regardless, getting sold off today pretty heavily on low volume. Same with Wise Key, sold off on low volume. On like no volume, actually. So, you know, I mean, does this give it a spot to like, you know, maybe recover pretty strongly coming into the new year? It's kind of hard to say. I think that Wise Key, again, has a nice catalyst coming up with their launch with SpaceX. And then, of course, Seal SQ is going to be, their PKIs are going to be inside of those satellites. So it's interesting. I'm still bullish on IoT going forward, right? Like, no doubt. The post-quantum cryptography is very interesting, and we're going to talk a little bit later. Someone had actually emailed me about this, QNCCF. This is quantum emotion, because I talk about cryptography, or rather encryption in a quantum world. And this one's a little bit unique, right? I think some people see this as a pairing with stuff like LAES, but in my opinion, it's actually not. And again, we'll talk some more about that, but of course, you're up 9.9%. And this is where you always get into these kind of weird spots, right? Like, we're going to break into what quantum emotion does and why it might not be as good as something like what Seal SQ is trying to do in a very serious way. But then you also get it. It's like, well, hey, we got quantum in the name. Push the thing up 10.58%. What a movement. This is up 6% when I was looking at it earlier. Folks, stay right there. We'll be right back with Basil Chapman. He's going to be on for 2 fantastic segments. We'll see you then.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I want to come over here, go to TFNN.com. We're going to go down to the newsletters tab, and right here, okay, second row, first column is the opening call newsletter by Basil Chapman. Now, we have Basil on every Tuesday, and his input has been fantastic. I mean, you know, I was just looking at Robinhood over the break. And I mean, it is still holding up incredibly well. They are doing some strange little countdown thing on their website. Stay tuned for. I think it's getting people hyped up. I'm not sure what it is, but Basil Chapman has I like the portfolio. It's great. One of the benefits that I get from working here is to see what all of these traders post, and I enjoy the opening call vastly. Additionally, I want to say as well is if you're a subscriber to the opening call newsletter, you get access to Basil's subscriber-only webinars is really what this is, right? If you're a subscriber, you get to go. If you're not, you don't get to see them. They're fantastic. He did one recently in November. This is November 14th, and it was sector rotations. It was fantastic, very educational. And additionally, he can tell us, but I believe it's on Fridays, he does a very long-form video. It's just an amazing value added, as I always say. If you have never subscribed to the Opening Call newsletter, you can do so risk-free. I know we have a lot of new people here that are watching and in the den that maybe haven't subscribed to any of our services, and I get that it can be a little bit strange putting money, to some people on the internet. Well, I promise you here that this is a 30-day money-back guarantee. For whatever reason it does not work out, you just email us, and if it is within those 30 days, we will refund you the full amount if it doesn't work out. We are betting that it is going to. Basil Chapman, how are you doing?
I'm doing well, Jacob, and you've done a fabulous job. And I have to tell you that this is, I'm looking forward to 2025. We want to look at things fresh, and I think that certainly for listeners to TFNN, we all the hosts offer something that they've spent years, decades in many cases,
yes,
working on. So when I met Tom the first time, I said to him, and he invited me to come on to TFN, and I said to him, well, if it's educational, and so far it's been education, I've been listening on the radio for a long time, I was very interested, and he said, absolutely, and I think that that's what we've tried to fulfill. It's a very special thing to be able to listen and learn about the market, about these the exigencies, about what the strange things can happen, how you've got to deal with them. We've had a very good year in 2024. Yep. Is it even possible to have yet another one? So I'm looking at this, and I think there's uncertainty, and the market. There's an expression: the market hates uncertainty. I say, what every single day, every single hour, the market has uncertainty. What the market hates is uncertainty about uncertainty. And that's kind of where we are right now.
Absolutely. Very, very well said. And I'm looking forward to 2025 as well. Are you, what are you seeing? I know we're looking at some Dow charts here. What are you seeing kind of going forward?
So there's a pattern that I look at. I should have had this already. I'll do it now very quickly. I'll just jump over here if I can get that. So there are patterns that I look at all the time. Been using these patterns forever, and it's just part of the vernacular in the Chapman wave. I look at three core delineated lines. This is a straight line up. One is a curve, a cup formation. The other is an arch. So these three characteristics really make up the market. Even as we're speaking, I'm watching the E-mini suddenly take off. We're always looking for the peak D, the fourth highest peak. 1 minute chart just had a peak D, pull back sharply. Look at this nice move up here, and it's making a rounded base, and the Dow is down 41. Let's hope that by the end of the day we actually close positive. I think that'll be a nice end to the year. So I look at these patterns and I say, all right, where are we here? So there's this pattern that I talk about a lot, and I had discovered a long time ago, but I used it here at TFNN on a monthly basis way back in 2003 when I started my newsletter, early 2003. I said, I think we're getting a pattern that says that ASA, which is a South African gold miner, is in the monthly chart is making a peak D, the fourth highest peak. We've got to be careful because those Ds can really pull back sharply, and that's what we made a top right then, and that delineated this particular pattern of the peak D. Then there was another pattern where the gold stocks kept coming down, and they came down in a straight line, then they would bounce and only have one or two peaks, like a peak A or a B, and then they'd come down and they take out the left side low. So I called it the dreaded H. So we got some nicknames, and here's the reverse Y. And you can see that all the time in every one of these charts. Look, I'm just showing you the 1 minute chart. Here's the reverse Y. This is the long leg up, then it makes the U shape, takes it out. Now a very sharp, there's the V shape pattern. So these patterns repeat over and over. So let me just show you what I'm looking at here. For the Dow, I think we've made this cup formation. So far, it's held the left side low of 42,146. I'm anticipating a choppy first couple of weeks here in January. So there's a chance that this goes from a lowercase h to a second arch, which becomes an M-shaped pattern. The M-shaped pattern is delineated very well. If you look at the TLT, look at this. Here's the TLT monthly chart. There's the dreaded H. Look how it failed. This is the monthly chart. And here's the lowercase h, which held the left side low, went slightly above the previous high and made, now it looks like a lowercase M-shaped pattern. So these patterns repeat over and over and over. So I'm anticipating that the market as a whole is going to start trading in this rather narrow, it doesn't feel narrow, but it's really historically looking, it's a fairly narrow trading band with limited upside right at this moment and slightly lower lows to the downside. And that's just the first couple of weeks. But this is also giving opportunity. And one of the things I look at is, so this is the Dow chart. Years ago, they used to have something that they took very seriously, which was called Dow theory. Dow theory had the transportation index, which was much more important than it is today because now it's much broader. Before it was a little bit more narrow. And the Dow industrials, which aren't the industrials anymore, there are only about 3 or 4 industrials. It's Dow 30 as far as I'm concerned, and I really like it because of the mix. But there was November the 25th, the transports made an all-time high. Within weeks, the Dow was getting close, and then the Dow made an all-time high. So that to me said Dow theory. Years and years I've heard about Dow theory, and every time I hear, Dow theory is working, I always say, that's a problem. So we've had a little problem here because now you've got this digestive phase. So within that context, I wanted to say, it's fantastic that the transports have confirmed the rally, but at the same time, I do believe that there's some kind of a digestive phase going on. It's mostly the daily charts. The weekly charts are still holding very well. I mean, if I go to the S&P weekly chart, look at this. a peak E, the 9-period moving average is way over the 40. All of that is very good. It starts to break down if the S&P, which is at 5892 with a high of almost 6,099, if it starts to take out 5,800, then I've got to say, you got to be careful. So that's what I'm looking at. The other thing that's really important is this rotation through the different sectors. We have been long the AIQ, which is this is the Global X Artificial Intelligence ETF, and it's still looking very good, but it's had a fantastic run to all-time highs. So now it needs a little bit of a digestive phase. That's the daily. The weekly still looks pretty good. I'll be back, I guess.
Yeah, Basil, please stay right there. Folks, we'll be right back with Basil Chapman right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. I'm joined right now by Basil Chapman. You're watching the Tom O'Brien Show. Again, Basil Chapman is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour that shows right here at 10 a.m. Eastern Time on TFNN. You know, I want to say to you, Basil, something you said in the first segment, you know, is like all the hosts, you know, traders we have, all the years of experience. And I think that is what is so amazing about what has been built here. You know, there are so many people on Twitter and on YouTube, you know, who are trying to be, you know, trading technical analysis authorities. And, you know, it's like they started trading 3 years ago or something like that. The combined experience of everyone here at TFNN is really its competitive edge. And it's such an amazing thing. And kind of what you're talking about, you know, I mean, you know, this is like some really unique stuff to read and listen to and understand, right, to use to trade. And you're not getting it anywhere else. So I think it's fantastic. This contribution from all of our hosts is just amazing. So.
Thank you. So let me just do a couple of things here. So you're talking about techniques. I've spent decades at this, so I call it, nobody even knows what it is anymore, Sears and Roebuck, but I call it my Sears and Roebuck large toolbox of technical tools. There are things that I look at. For instance, years ago, even before the 1978 87 crash, that is, I'd been looking at round numbers. And the day of the crash, October the 19th, 1987, I kept seeing these round numbers, and I thought, oh my God, when this finishes, and you couldn't get any news. It took days for some people to get the information, but I had charts, and I also was still hand charting at that point, so I could go the next day and say, I believe that this is a low, and we should be making new highs within 14 months, which is kind of what happened. But it's because of those round numbers. So I've been looking at this, and look at this. Amazon. Now the season is over, right, for Amazon, basically. Amazon made a round number, 233.00, round number high. Pattern that I was looking at, that dreaded H, look, there it is. But it's holding quite nicely. So I take these things seriously as information, but I don't push it and force it into the chart, because the chart has to then prove itself. And as I'm looking at it, the Amazon hasn't gone even close to the 233 level, and that takes me to the RTX index, which is the S&P retail, which doesn't have a not RTX, it's the RTH. This is Raytheon. Look at Raytheon pulling back from that peak D back in the weekly chart, and I talked about this before. It was just an accident that I've got to say that it looks to me like there could be some peace in the Mideast, which might affect gold, it might affect oil, it's affecting the defense stocks. Look how sharply many of them have pulled back. So those are things that I like to look at. So let me go back to this. The RTH is the Van Eck Retail ETF, which has Amazon as 20%. Maybe the numbers change, but it's a big part of the Van Eck Retail ETF. That made a high of 240.27 at an all-time high. But the XRT, which is the S&P retail, which is just kind of a balanced fund, has made a peak D, but way below the 105, I think it was, all-time high from 2021. So even within sectors, you're getting this diversity of activity. And that to me is really important, because it tells you that you've got to be very selective. So for weeks now, as you know, when you've interviewed me, I've been saying we've been raising cash. The positions we love, like our AIQ, which is the ETF for the artificial intelligence. You mentioned Robinhood. I want to keep, we got in, I mean, so perfectly. We got in at 16 in Robinhood. We waited and waited and waited, and then we got in where? Right there. The low was 13.98 on October the 4th. The very next day we went long. We waited for that, and we've been long ever since, taking little bits off. And I'd related the action of Robinhood in a way to Bitcoin, which we've also been long for quite some time. So if you're looking at Robinhood, if you're looking at Bitcoin, you can see the pattern. If I can just hit the right buttons, there it is. The pattern is not dissimilar, except it's pulled back a little bit more than Robinhood. And that's just been saying to me that in sectors that have been working very well, even there, you've got to be careful because there's a digestive phase. Look, the weekly chart is still not bad. The monthly chart looks very good. But this daily chart says, it needs a little bit more time to pull back to form some kind of a base. And that's kind of what I've been looking at. So for my subscribers, I'm looking at different areas now as well, because once, for instance, will Bitcoin pull back and will gold start to move up? Well, we don't really know. But look, if you look at the weekly chart of gold, the continuous contract, it's just making this H pattern. And so far, it's holding and not taking out the left side low. So I'm saying to subscribers, we're looking for some new entrants coming up in the next few weeks. And this is a perfect time. We've raised cash. We're looking to put money to work. And I'm looking at crude oil. Crude oil's just been in the doldrums. But look at the last week. This is nice action on a short-term basis. The weekly and monthly charts still look, not so great, but it's looking to me like there are going to be some opportunities in certain areas that I kind of avoided before. I mean, even natural gas. Here's the natural gas. A very nice move up. Now taking a bit of a breather, I might go to the UNG, which is the United States Natural Gas Fund. You can see it a little bit better here. You can see a big pullback from the last 2 days, but that gapped up very nicely. It's the first time for a while that natural gas has shown some inclination to hold a gain, and that's important. So what I'm saying is that within the looking at what's happened, the major thrust to the upside by the tech sector, I think is still there.
Okay.
But there's a very well-earned digestive phase going on. Within that, you've got these little nuggets. You've got, you had spoken the other day about QUBT, which is QUBT is the quantum computing. It's had a fantastic move to the upside. So these are the small areas. These are the little niche areas. So they keep having a turn, and then they kind of fizzle. They don't become headline news. So I'm looking at this and I'm saying this is still a very exciting market. I just want to look at my notes here because there are a couple of things that I forgot that I wanted to talk about. Yes, within this different, I like to look at round numbers. That's what I learned 40 years ago. So if you look at IBM is like, it was a sleeper. It did nothing for not years, but decades. Then all of a sudden it morphed. It became a new company completely, and it became cloud, AI, enterprise software. And look at the spectacular move it's had in 2024. Now it's taking a bit of a breather. So, and it had a round number the very day of its all-time high of 239.35. It made a 230 round number open. So I'm looking at all these different things, and I think this is going to be a very opportune time. So it's the reason why we raise cash. We want to put it to work over the next few weeks.
Fantastic. Basil, thank you so much for coming on. We'll see you Thursday at 10 a.m., all right?
Thank you very much, Jacob, and a Happy New Year to you.
Happy New Year to you, Basil. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. I was just joined by Basil Chapman for two fantastic segments. Unfortunately, Tim Ord will not be on today, as we wanted to have Basil on two segments. Additionally, I think we're going to have Basil on for two segments each Tuesday as well, just because his contribution is so great. I did speak with Tim. He's going to try to be on Thursday, but he's looking forward to the new year, so all of that will be good. Take a look at Live Person Incorporated right now, up 20.07% for the day. You make a high of 208. What's the deal? What's the deal with Live Person? Live Person is supposedly supposed to be, the SoundHound, competitor. If SoundHound is rallying, kind of the same concept with like something like Nebius, right? Where if its competitor is, doing well or valued at a certain point, and this is at a discount, it should meet up, right? So this is kind of the idea. Up 20.37%, it's great, although unlike Nebius, which I think is financially one of the most beautiful things I've ever seen, just based on its, its fundamentals. Take a look at Live Person. This thing is sketchy, meaning its balance sheet is terrifying. It has a lot of cash, which is all right. Yeah, like 142 million in it. But this thing has like $470 million in debt. 75 million of which are current, which is just kind of weird. Now, why is it running up in that kind with that kind of debt saddling? It's because they were able to resituate it to pay it back by 29 as opposed to 26. So in that capacity, I guess that's good. But still, very freaky. Contracting revenue. Their losses are a little bit less. Let's see here. Yeah, the loss is a little bit less, cost is a little bit less. So it looks like they just have a general contraction of business kind of going on from that. They're spending less on marketing, etc. But it's the same kind of concept with SoundHound, right? This is like the next thing. But trading at 148 million is interesting. It's not a bad market cap. But the question is, and honestly, I would say too, with revenue just of 2024 of 74 million, and this is on the 10Q. Honestly, it seems somewhat interesting. If they can manage this debt and actually start increasing revenue, would be kind of neat. And I could see an argument for this taking off, especially with this tech being so dominant, But anyways, I just want to throw that out there because I was looking on the break. The real thing I want to talk about is QNCCF. A second here. This is Quantum Emotion, Canadian company. Guys, what's up with the name of the company Emotion? So what these guys do, this is in the realm, because I speak a lot about cryptography and encryption within a quantum world, how we're not maybe right there yet, at least with quantum computers just being able to break our current RSA standards. But again, as we've discussed, something not being able to do something in the moment is not really a security position, right? You need to make sure that you're ready for any kind of thing. So, we've spoken about Seal SQ with that, right? They're using post-quantum cryptography. That is using things like Kyber dilithium, which are lattice-based encryption standards. And someone else brought this up to me, being like, oh, this is a post-quantum as well. Or rather, they said it's quantum. And that is correct, but there is a difference between post-quantum encryption and quantum encryption, right? I mean, post-quantum encryption is, using standard lattice, like as it said, lattice-based encryption. That gets into, like discrete mathematics and everything. Quantum encryption is a little bit different in that it uses like quantum qualities essentially to encrypt keys. Okay, so that is a big difference, right? Because we know that quantum computers can't really break post-quantum standards like dilithium or Kyber. We don't know if that's really the case for things like quantum, right? Quantum encryption. This is using something called QNRG, which is quantum number random generation. And at the moment of that random generation, your decryption and encryption keys are generated, and that's used to encrypt the method. And in theory, you can't replicate something that's truly random, right? And there's not really a lot of discussion on this as far as mass adoption in any way. Like, the reason why I like things that are trying to add post-quantum cryptography is because you have NIST, you have DoD, you have the UK and its Dominion, all supporting things for lattice-based encryption, post-quantum cryptography. There is not really a lot of support, or really any support, for things like QNRG. That, in and of itself, I feel like makes me not want to look at this any further, right? NIST is already building this stuff out. Again, the DoD is already building this stuff out. If you're going to do work with them, you're going to use post-quantum. That is becoming very quickly just a standard for government. That trickles down into enterprise as well. And I'm not sure a lot of people are using things like what QNCCF is providing, right? I mean, you're looking at things like Amazon and Meta and everything. They're already using lattice-based encryption standards, not random number generators. So it's kind of interesting to me. If you want to read a little bit more on all this, because I know it's a lot of probably just, technical stuff, like what I'm saying, I will send it to you. You just email me at jacob@tfnn.com. And this is actually a paper from the Netherlands that explains this very well. They're the IT auditing group of the Netherlands. So, obviously competent people in the know. And in my opinion, I think it's pretty digestible, right? Especially if you know just a little bit about how security and networks work. So as far as QNCCF is, I don't think on the large that QNRG is going to be what the industry adopts at all. Now, that is a little bit different, right, than saying maybe don't touch the thing. And what I mean by that is you're getting a lot of just hype cycle, right? Things that have to do with quantum, things that actually have to do with quantum, even things that don't have to do with quantum still blow up right now because they have quantum in the name. We spoke about that a bunch. But this does, something in that realm. I think that has it can have room to run. It's just not something that is maybe long-term viable, and it's something you got to be aware of if you get into it, right? Expecting a big run. I mean, this is 191 million market cap, showing a $1.20, right? And it's not necessarily clear that their technology is going to be used, standardized in any way, and it seems like it actually is not going to be. But that doesn't mean that, the thing can't run another 30%, but I'm not saying it will either. So that's something you kind of have to suss out if you like a certain stock, see what kind of retail sentiment is on certain things, be aware of dilution schedules, be aware if they have a bunch of debt that's coming up or whatever it may be. That's kind of how, you play stuff like that. But it's also extraordinarily risky. Extraordinarily risky. You're speculating at that point. Folks, stay there. We'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We have just a short segment here before we close out the year. How about that? Take a look at the SPX. You had some nice movement right there, trying to recover a little bit. Little bit volatile, wanting to test kind of that inflection point right now. We're off about 0.43% at 5,881. You get the composite off about 0.89% at 19,314. You get the Dow Jones Industrial off 0.08% at 42,536. You get the DXY up about 0.45% at 108.44. Silver off 0.45%. Gold up 0.76%. Doing pretty well. Let's see how the Man VGZ is doing. Up 2.07% at 67. There's been a lot of talk about gold and what it's going to do going forward. Let's talk a little bit about something that blew up today, which is Hollow. I know it blew up yesterday because it blew down. Yeah, I guess, in some capacity. You're on 22% right now, but this had a massive, massive movement. As you can see, up to 925. Oh man, that was even today. Then some, this is crazy volume for this stock as well. 155 million, 155.9. These little things like Hollow in WeMe or WiMi, I think it's WeMe, but I've seen these companies do this stuff before, right? It's almost like there are pump and dumps in some major way. Chinese companies and everything. Microcloud, this is hologram, is again weird to me, and be cautious with this kind of stuff because it just seems like they're jumping on that quantum hype again. I was under the impression that hologram was a LiDAR company for basically autonomous driving for cars. I'm pretty sure they are. But now for some reason, they are suspending qubits for quantum computing, and their publication on it is just a bunch of a lot of technical jargon, basically. Be cautious of that one. Folks, thank you so much for joining me. We will see you next year, 2025. Have a great New Year's Eve.